you think when you bought that unit that you'd hold on to it forever?
I had every intention of holding it forever, and it was more of a belief put into me by my dad of
How did you actually find it? How did you fund it? And how is it performing now?
I was able to find it by I was just listening to podcasts and seeing what other people do. And you listen to enough and you kind of start to pick out the patterns of how people are finding these deals. And 15 people say the same thing. There's probably something behind it, right?
How do you figure that out? Like, do I go on Google and just look up the area? And
what I personally did, and I don't know what other people do, but I mean, I literally just typed in Springfield, Illinois demographics. And there will be like 5 or 6 government websites or websites that you can click on, and it will break down every single little thing you need to know.
Hi, everybody. This is Jose Luis Morales. Welcome back to the Morales Group Show. This is episode number 89. Today we've got Chance Ireland. He is a real estate agent. He is a real estate investor and a TikTok superstar as well, too. That's actually where we connected. Today, we're going to be talking about how he was able to quit his job recently and get into real estate brokerage and also real estate investing as well, too. Welcome to the show, Chance. How are you?
I'm good. Thanks for having me. I'm looking forward to our conversation today.
Same here. So I just wanted to start off by just asking, who is Chance Ireland and how did you happen to stumble upon the real estate as well, too?
So I am a 28-year-old living out in Seattle, Washington. I have worked at Boeing for the last 10 years. I just recently quit, which we'll get into. And then my parents have always kind of been into real estate. And so growing up and being around smaller multifamily, single family houses and just kind of seeing my dad collect rent for doing nothing. You're working, but back then, like, that's all I saw. And I was like, this is crazy. And it's like, they're just paying you to live somewhere. And so it really sparked that interest at a young age. And I was just always into it. And I got into my first triplex through my dad, actually, which is something we can get into.
That's what I was going to ask you is, you mind if we kind of dig into your first real estate deal? It's funny because I had a similar background to you where my dad invested in real estate and I saw all the benefits. So it's interesting because when you grow up in that sort of background, I almost feel like they've already painted a picture of what's possible for you. And you can just transition into bigger units as well, too. So take us through your first deal and what did that look like? How old were you and what limiting beliefs or if you had any fears about getting into the real estate market at that time?
So I got hired at Boeing 6 months after high school. So I was 18. I worked at Boeing for like a year and a half, 2 years at that point. And I wasn't making any money. I knew my dad was making money through real estate. And I was like, I know that I want to get involved. I started reading all the books, listening to all the podcasts, and really building like this base knowledge of what it is and what it's supposed to look like. And then one day, my dad's like, hey, I have this triplex and I have to sell it. What do you think? And I was like, I don't know what I think, but I know that I want it, right? Like, I don't know enough about it to jump in, but I know that I want to be involved in real estate. And so I bought it at 20 and then I turned 21 like 2 months later. I didn't know a single thing. I didn't know anything about real estate. I mean, you can only read so many books and listen to so many podcasts. And then once you get in there, I mean, you learn so much in the first 6 months to a year. I don't know if you want me to get into the numbers of it or anything, but
I'd love to hear that. Yeah.
Yeah, it was exciting. I got into it for $305,000. We used a first-time home buyer loan. So I think I put down 3.5%, which my dad loaned me the money, which I was like, this is amazing. You know, I'm like no money into it. And I get in there and then I just start to realize that it was just really run down. It was really under rented because my dad's whole goal was just kind of have the units pay for the building. And then in 10 years in our market, it'll be worth way more. But I mean, these units are rented out for $700 a month each. And I mean, market rent in our area was $1,000. So here I am, 21, rolling into this thing. And all these tenants have been there for 5 or 6 years because the rent is so cheap. And I'm like, all right, guys, you're going to get a 30% rent increase and I'm going to kick one person out and move in. And obviously that didn't go over too well. So that was a bit of a learning curve, but I ended up getting into one of the units and doing the classic house hacking method. And so I lived in one of the units, rented out the other 2. They kind of made that payment. I was able to redo that unit and then kind of flip flop into the other unit and then rent that one out at the higher rate. And I did that for all 3 of them. And then kind of fast forward a few years, I sold it and made a decent amount of money. But as far as limiting beliefs I had on it was just thinking that it's something I can't do at 21. Like it's not going to work out for me. And it's like, once you get into it, there's so many resources and then you'll start to come across questions, like legit questions that you can literally just type into YouTube or type into Google or call someone. And there's so many resources out there for you to lean on that I was able to kind of get through it. I think if I had to go back, probably wouldn't have put so much money into it. I like redid the roof, redid the siding, redid the windows, had the whole thing painted, just dumped like 40 or 50 grand of my own money into it. And it didn't really need that. So I might have overdone it, but I was just excited, and it worked out. After I think a year and a half ago, I sold it for 580, made something like $260,000 on it, which was really exciting.
Did you think when you bought that unit that you'd hold on to it forever?
I had every intention of holding it forever. And it was more of a belief put into me by my dad of, this is in a good central area. You should never sell it. It's going to be your retirement. And that's what I thought. Because it's like, he got me into real estate. He got me into my first property. I was like, this is going to be it. I'm going to live off this $3,000 a month once this $800,000 asset in 20 years is paid off. But once I got into it and I started diving further into real estate, you start to realize that your return on equity, it becomes so low. I mean, you're going to pay this whole building off, and then you're going to like $3,000 a month in rent, and then half of that's going to go to expenses. And so what am I going to do? Live off $1,500? Like it just didn't make any sense. And so I ended up making that kind of executive decision to sell it.
I asked that question because when I bought my first property, I thought I was going to hold on to it forever.
Yeah.
And it was partly because of the way I was brought up as well, too. But then I realized, similar to you, the return on equity wasn't good. But I talked to newer investors and they're like, I'm never selling this property. My philosophy on that changed, that if you're consistently growing and you're getting access to new information, as you grow older, the way that you think will start to change about things. So tell us about the return on equity. Like, this is a formula that I love telling clients about and I love teaching on, but like, how did you come to that conclusion that the return on equity was going to be really low? And maybe how could somebody use it in their own life as well?
I tried to sell it one time before. It had like $80,000 in equity. And I was like, dude, I can put, 20,000 down on like 4 different properties and I can grow my portfolio like that. And that was my entire intention. At that time, my dad just put a sit down. He's like, you're not selling it. I think I was 22. So I was like, I have to listen to him. I mean, he gave it to me. I lived at his house still. So I was like, what am I going to do? And then I held on to it for a few more years and really like, dove into learning about everything. And it's like, I have $260,000 in equity at the current value because I got it appraised. And I was like, it's only making $3,000 a month. And after all expenses, I might cash flow $500, which is like, you should really be saving that little amount for CapEx anyway. I mean, if you full on live on it and then something happens, you're ruined. So I started kind of looking around and it's like, would this money be better placed somewhere else? Like, could it make more money somewhere else? Because it's $260,000 to make $500 a month. I mean, that's terrible. So I ended up looking around. I really dove into apartment buildings. I knew that I wanted to get into it. And I found an apartment building that was 24 units and it ended up bringing in $18,000 a month in rent with the same amount of $260,000 down. And I was like, I don't know a whole lot, man, but that sounds way better, right? Like there's got to be more money involved there. Yeah, but I would say to anyone who has 50% equity in your house or something, I mean, there's plenty of opportunity for you to pull some of it out and not be over leveraged and still have your PMI and not have to pay for that, and go and buy an investment property that's going to offset any higher interest rate or anything you have to pay. And I would hands down do it again and again.
Looking back at it now, I think that when my dad would tell me to hold on to properties for long term, I think the part that he missed was the 1031 exchange part, meaning that if you find something where you can get a greater return, to basically exchange it into a larger asset. And I know that's a strategy that a lot of people utilize, about like buying a smaller property once you gain equity, moving up to a larger property. It sounds like that's what you did. You did the 1031 exchange from the smaller triplex to the 24plex, right?
Yeah, that's exactly what I did. And so it kind of came down, because it's like I have all this equity, and if I just collect it, I'm going to pay 30% or something ridiculous. And I was like, I don't want to pay that. And so it came down to I did the 1031 tax exchange, and then it really kind of put this time barrier where it's like you have to find something right now. So I became super motivated to find a property. So I located an area. I did all my due diligence. I found property managers, and I started calling every single broker or every single commercial broker and seeing what kind of deals they had. And that's how I found this one.
What did you pay for the 24 unit again?
$1.3 million.
That's crazy, because you literally increased your purchase price from 500 to 2.5 times at 1.3. But you said you were collecting $3,000 of gross, but you 6x that in the 24plex. It's now $18,000. So you only increased your purchase price by 2.5, but the cash flow went up 6 times more than the 24plex. I know that you said that you became instantly motivated. How did you actually find it? How did you fund it, and how is it performing now?
I was able to find it by I was just listening to podcasts and seeing what other people do. And you listen to enough and you kind of start to pick out the patterns of how people are finding these deals. And 15 people say the same thing. There's probably something behind it, right? Especially when they have a few hundred units. And so they were all saying, like, you need to call these commercial brokers. They're the keys, they have the keys to unlock everything that you want. And so I basically found the area that I wanted to buy in. And I found it by we kind of had a criteria of a population of at least 150,000 growing that would have consistent money flowing into the economy. And so I went to Springfield, Illinois, which is the capital. And so there's always that government money kind of flowing in, was my thought behind it. And I mean, a little later now we're realizing taxes are a little high there, but yeah, I kind of forgot your question. I'm sorry.
It's okay. So it was just, how did you find it? How did you fund it? And then what it's performing like now? Did you have to put any additional money aside from the property from the 1031 exchange, or was that your down payment? And then how did you finance the remaining balance? Was it like a private lender? Was it a national lender?
So the 260,000 was like the exact amount I needed to have down at 20%, which I was super excited about. And at that exact time, my uncle reached out and he's like, "Hey, I heard about this thing called syndications. Have you heard about it?" And I was like, "Yeah, I definitely have. It's about pooling money together and buying apartment buildings." Funny you bring it up. I'm closing on one in like a month. And he's like, "Oh, I'm really interested. I'd love to get involved." And so long story short, him and one other partner ended up putting in $100,000 total on top of my 260. So we were able to put down 25% and then hold back like 30 or 40 grand just for our own personal reserves in the account. Then we just wrote up an LLC. I got 80% and they each got 10. And I went to just a local bank in that area. And so there was 3 or 4 local banks. And I thought it would be a lot more difficult to finance it. It was easier than buying the condo I'm in right now or buying my car. I mean, I worked at Boeing making 70 grand a year. And the payment on this was going to be more than I was making. So it's like, how are you guys going to approve me for this? But a local bank ended up doing 25% down, wanted 6,000 reserves. And as long as it had the 1.25 debt coverage ratio, they were good. I mean, I don't even think they ran my credit, honestly. I mean, it was performing so well at that time that they were comfortable taking that risk. And when you get into these kind of mini markets, those small local banks can make decisions for themselves, which is really interesting. So it's like people always have these standards of you need 25%. I mean, the bank can make the decision on these new properties we're closing on. We're doing them for 15% and it's a commercial loan. So it's been exciting and it's been performing really well. We bought it and then the moratorium happened. And so we've had some issues with that. We had one tenant, you can see on my TikTok and Instagram, not pay rent for 8 months and then just totally destroy the unit. And so, I mean, we had to pay $5,000 or $6,000 to redo the unit and then $8,000 in lost rent. But other than that, it's been doing really well. Implementing a property manager, a good one at that, has made it easier to manage and less of a headache than my triplex was.
And then you said the market was Illinois. So that wasn't where you were. You live in Seattle, right?
Yes.
And the triplex or the 24plex is in Illinois. What about the second property that you're buying? Are you going back to the same market and just kind of building that economies of scale? Or are you going into a different market at this point?
So the idea that I'm having is we know taxes are kind of high there, but the rent to price ratio is so great that it's like it still makes sense. And I have a team built in the area. I mean, we have property managers, contractors, agents, insurance, like everything we need is right there. Or just to buy another building and kind of push it into the system that we've already built is easier, right? Now it's just coming down to finding deals and if they meet our criteria, buying them and placing them into this system that's already been pre-built.
Can you walk us through that process? Like, I know that you talked, and this might have gone over some people's head, but I know that you talked about population growth. You talked about, like, obviously in an area that is up and coming. Like, how does somebody go about doing that research, or how did you go about doing that research? I've invested in Southern California. I've always wanted to go out of state just because, I mean, I'll give you an example. I bought a building in California for 1.7, currently grosses $11,000 a month for 1.7. It's got potential for up to $16,000, $17,000 a month, but I paid 1.7. You purchased something out of the area at 1.3 that's already producing $18,000. So the cash flow is just a lot better in different states. But my fear is always like, okay, I don't know enough about the other areas. How would somebody like me go about doing that research?
What you're kind of trading off is like California is going to have higher appreciation. My market, I mean, I've talked to people out there that bought a house 10 years ago and then today it's worth $10,000 or $20,000 more, right? In my market too out here, I mean, houses are doubling almost every 5 years. Like it's crazy. So really you're trading off appreciation for cash flow. But I mean, the cash flow right now that I'm getting over there is outweighing the appreciation we would have here, which is great. It might be a little harder to manage because it's that 24 unit, but I looked for an area that had a population over 150,000 because you want there to be enough people in the area working enough different jobs that if someone moves out, you have other people to fill it up. You have, your pick of contractors and more importantly, your pick of property managers. I remember the first building I almost bought was 700,000 in a little town in Texas of like 15,000 people. And I'm glad that didn't work out because trying to get people out there to work on it would have been terrible. And it would have been difficult to fill it up. And just all that would have been a big headache. I wanted to eliminate that and make sure there was enough people in the area doing what I needed to be done. And that was true in Springfield. And then as far as the money case, I just wanted somewhere that it's not so much that it's up and coming, but that it's level and it's going to continue to have people and it's not going down. It's increasing at like 2 or 3% a year. It's nothing crazy, but it's not a downward trend. And it's something that if we do hold and we raise rents and lower expenses, that we can still make a pretty good profit on.
How do you figure that out? Like, do I go on Google and just look up the area? And I know Google has like a chart where it kind of monitors population. Like, is there somewhere where I can go to kind of figure that out? Or it's just
what I personally did, and I don't know what other people do, but I mean, I literally just typed in Springfield, Illinois demographics. And there will be like 5 or 6 government websites or websites that you can click on, and it will break down every single little thing you need to know about an area, about its population, about the poverty rate, about how much money they make, like homeowners versus home renters, and kind of everything you need to know. And you can even get to the point where you can look up the anchor companies in the area. And if you really want to dive in and make sure that they're staying long term, just to make sure your asset is secure.
How do you find out if the anchor tenants are likely to stay?
As an example, out here in Everett or Seattle, anchor companies we have here is Amazon or Boeing. And it's like you can look them up and you just by going to Boeing, I mean, they've got like 30,000 employees. I mean, they have 2 or 3 of their biggest sites. The biggest building in the world is out here. It's like they're not going anywhere, right? But maybe if it's like someone who like Kodiak who builds cameras or something like that. And if you just know that it's kind of on a downturn and they might be looking to exit, it's just something you might want to take into consideration.
So I think that's great advice for somebody. Walk us through your second unit. You're under contract on a property right now, right?
Yep.
What does that look like? How did you find it? How are you going to finance it?
It came from a push from my 2 partners. One of them is extremely motivated to get over 100 units by the end of this year. That's not going to happen, but by June of next year, we have every intention of being at 100 units at scale. And so every day, like we'll have our Zoom meetings and our masterminds and just kind of align everybody. So every day I would look on the like realtor.com, LoopNet, Crexi, look at all these sites and really see what's going on and then talk to my commercial brokers who would send me deals. One day it was on for an hour and I saw it and it was a little 8 unit in Springfield for $309,000 and the rents are $5,000 a month. And I was like, this is a good deal. Per unit price was like $34,000 and I know that we paid $55,000. So there's this huge upside potential and it's in a good area. I sent one text, I was like, I really think we should put this under contract. And they're like, yeah, we should. And so I did. While putting that under contract, I met probably my most valuable partner out there is a broker who just goes around and finds all these apartments. And the seller of this one building had another 8 unit that was off market. And I was like, let him know, man, we would love to package these together and buy them both. He was trying to sell it to his family member or something, and it ended up not working out. And so he brought it to us off market. He's like, I'll definitely sell this to you for $350. It was a newer building. It's on a bigger lot. It's on 2 lots and one can actually be built. So we have the option of in the future, maybe building another 8 units. So the 2 buildings together is 16 units and then it's a $659 purchase price and it's bringing in $10,000 a month. And then we have every intention of raising the rents of about $50 a unit, which will bring the building value up to $850,000, $900,000, and then probably taking an exit on that within a year.
Why did you decide to go into the larger buildings versus the smaller buildings? I know you kind of talked about return on equity. I know a lot of people are scared to make that jump into the larger buildings sometimes. Why did you decide to do that? And why is the goal now 100 units?
So great questions. I started at the 3-unit building. And then after kind of managing 3 tenants, and then I moved down to Seattle. I saw the building and it was like, 2 hours away from me. And I was like, dude, I don't even talk to these guys. Like I talk to them once a month. If the rent payment doesn't hit my account, then I'll text them. They'll reply. If they have an issue, I send a contractor out. I have a guy that mows the lawns. It doesn't really matter where it is. And so that's what kind of inspired me to go out of state. And then while I was like, if I'm going out of state, like if I can do 3 units, I could do 30. And I hear everyone say that on every podcast. And it's so true. I mean, it's like you're once you put all these systems in place, it doesn't really matter the unit count. So that kind of inspired me to get into a bigger building. And then with the amount of money I had, I knew the price range I was in. It's not like I was looking for 24 units. I knew that I wanted something at least over 5, because I wanted to get into the commercial space. And now that I'm in the commercial space, I don't think I'll ever go back to buying anything below 4 units, just because these buildings, especially in the Midwest, are valued solely on the amount of money they bring in, and they're expensive. So it just opens up this huge opportunity to go in there. And if you can lower expenses and raise the rent $50 a unit, I mean, all of a sudden now over 24 units, you can increase the value $200,000 through this forced appreciation, which is incredible. You don't have that same freedom in anything below 4 units. And specific markets on like the coast and stuff, it's still the same. When you get into commercial, they're still kind of valued based on where they are. But in the Midwest, it's really not the case.
I know that for some people, the incentive to get into the 1 to 4 is just the terms. You get a 30-year fix. Sometimes you get a 3.5, 2.5 interest rate, 4%. What do the terms look like on the commercial buildings? Like, is the financing like fixed for 30 years? Is it fixed for 10 and then a balloon payment? What type of rates are you getting as well too?
So on the 24 unit, we got a 3.75% interest rate locked for 5 years until our balloon payment, and it's 25-year amortization on that. And then on our 16 unit, we got a 4% interest rate, so a little higher, but they gave us a 25-year amortization and then a 5-year balloon. And the same bank that we bought our 24 unit with was only going to give us a 20-year loan on the second property. And so we had to go to a different bank. And they also let us put 15% down, which is incredible. I mean, especially when you're in the millions of dollars of purchase price, it makes a big difference.
It's a lot better than 25% down that you have to put on a residential property. Where do you see yourself in 5 years? I know that obviously, like, we connected through TikTok. I've been seeing your growth. Obviously, I see that you're getting a lot of engagement. You're growing. I know that your life has changed substantially as well, too, in the last 2 years, from working a regular job to now obviously running your own businesses. What is the future for Chance?
I've experienced real estate. I'm kind of at this like almost exponential where it's just going to kind of pop off. And it's like, that's how you hear about people that in 3 years have 1,000 units. It's like, how do they do that? But it's like in 1 year, I went from 3 to 24, right? So it's like incredible. And then in the next 8 months, we're going to try and beat 100. And that's because you don't have to count one at a time. The goal is to get to 100. And that's just because you kind of get into the triple digits there, and it's cool. But then every year after, I have every intention of growing at 100 units. So in 5 years, I'd love to be at 500, 600 units. That's kind of my goal now. And I could see myself in a year or two being like, we can just close on a few 100-unit properties a year once you kind of get the money partners and can raise all that money and get everything you need. So, I mean, in a few years, I could be, could be at 500, 600, 700 units, which would be great. Or I could just be down at 200 units that I really like, that's paying enough cash flow, and I can just kind of go and do whatever I want. So I don't know which way I'm going to take it yet. We'll kind of see what happens.
What motivated you, Chance, to kind of grow your personal brand? I know that's something that I started doing recently, and I've obviously seen tremendous benefits already. Yeah, what motivated you to do that?
I would be like on Instagram scrolling around, and I would see someone with a huge following on Instagram or something, like 15 to 20,000 people, and they own 2 rentals. And I was like, dude, I owned 2 rentals before I was 20. So it's like, that's crazy. And then they would give this advice and put them in a position of authority or leadership where people look up to them. And I was like, I think I could offer the same, if not more, perspective from at least my point. And then after following a bunch of the bigger influencers, you kind of start to see a pattern of everyone is like, create your own personal brand. Like, you have nothing to lose and literally everything to gain. So that's what I did. After I closed that 24 unit, I was like, you know what, let me post on Instagram and do some posts, and let me start a TikTok, which I wish I had started a year or two earlier, because there was huge growth then. I mean, there's already been tremendous benefits. I've met tons of people through TikTok. I'm working with 4 or 5 people right now on finding their houses through just the leads coming in from TikTok. And I've met some friends on TikTok, and it's been awesome. It's cool to connect with people in that field and really kind of surround yourself with everyone doing real estate things, because that's what I'm interested in.
And then if people wanted to get a hold of you, where could they find you?
So you can find me on Instagram at Investor Chance, and Chance is CHANTZ. And then it's the same on TikTok, Investor Chance. And if you want to email me, you can email me at Chance, which is CHANTZ at IrelandGroupCapital.com. If you have any deals or you have anything you want me to look at, I'd be happy to do that for you.
Well, this was episode number 89. We had Chance Ireland, real estate agent / real estate investor / TikTok superstar. I look forward to connecting with you and staying in touch with you. And obviously, I'm very appreciative of you coming on the show and kind of just sharing your value. Thank you so much. And we'll stay in contact.
I appreciate it. Thank you for your time.